Alright, we're going to be looking at a series of indicators. The last week we had a look at Bollinger Bands. Now everybody uses indicators, so what we are going to do is look at the indicators and try to use them in a different and a practical way. We are not going to be looking at the indicators in the standard thing. Now let's just get down to one thing first. All indicators are lagging. This is something which I have said earlier. This is something which I do not do. I do not use indicators. As a matter of fact, the Bollinger Bands that we went over the last week, the last session, this RSI that we are going to be looking at, I really don't use them. Yes, we can use them in particular situations. I do use them sometimes, but not as necessarily on a regular basis. I prefer price action. But if you use the indicators correctly, it can support the price action. One of the things that you can do, okay, sorry about that. Now, as I was saying, if you use the indicators correctly, they can support price action. Now, most of the times, especially for new traders who come in, they tend to use indicators a lot. I have seen charts, believe me, I have seen charts with an RSI, a MACD, maybe a CCI, a stochastic, and 10 different moving averages thrown in, so much so that you really cannot even see the price action. But price action is king, as they say. Price is king. And if you look at the calculations of any indicators, now we are really not going to go in behind the theory of it. I'm not going to show you the RSI calculation. You can see it for yourself. It's available everywhere. But if you look at the calculations of any indicator, it's based on price action, where N, if you remember, the alphabet N is a variable in the calculation of every indicator, where N is a price action. And once price changes or price moves, it reflects on the indicator. So indicator obviously is lagging. You cannot really use it as a confirming or a leading indicator of price or to give you something different. But if you use the indicators correctly, they've got certain characteristics which can give you leading factors. I would call it leading factors. They are never a confirmation. For example, what we went over the last week was the Bollinger Bands. We looked at certain characteristics that if you look at maybe a squeeze of the Bollinger Bands, or if you look at one particular reversal method, that if this candlestick forms a particular reversal situation, you can expect a reversal. Of course, nothing is 100% guaranteed here. Similarly in the RSI. Right now, before we start up, what I just want to show you is, just before we go ahead, we are having the workshop, my workshop in London next month. It's mid-month, 13th and 14th of July. We still have an early bird registration on till the weekend, so you'll be getting the price at almost half the expected price for just about $4.99. We had a webinar. I don't know how many of you attended the webinar yesterday, but it was pretty successful. We've had a good amount of sign-ups. Places are filling up fast. If you're interested, please feel free. Come over to that. Alright, we'll come back to this later. Now let's talk about the RSI. Now we should not use the RSI in the regular oversold, overbought situation. Sorry about that. Sorry. Most of the times everybody uses the RSI in that when your RSI is overbought, when it's above 70. Here the RSI overbought, oversold situations, or the levels are 70 and 30, you should ideally sell. And when it's oversold, when it's below 20, you should buy. Well, it does work sometimes. Now if we look at this particular situation, what I have here, when price was quite overbought, we did have a strong reversal. And right over here, when price was close to being overbought, again we did have, oversold, sorry, we did have a reversal. But if you look at a situation here, let's just zoom this inside and let me show you something. Right, if you're trading the hard right edge of the chart, this is a situation where your indicator is pretty much oversold. So it's almost reached the 30 figure, pretty much there, and based on the conventional advice or the conventional way of looking at an indicator. If you look at this, then obviously one would want to buy over here, so that okay, this looks good, and you come across one bar, this particular bar, this looks like a good bar. Now forget about the time frame that we are looking at. Price action is fractal in nature. I'm so sorry. What works on a daily time frame will work just as well on the 1 minute time frame. Right? This could be any time frame. This works everywhere. So if you're looking at a strong bar over here and your indicator, this is standard divergence also. If you look at this, you had price making lower lows, and your indicator formed a double bottom over here. Right? It did not make a lower low, it made a kind of a higher low. So you would say, oh, good diverge, you have a strong bar moving up here, let's go long. It looks like it's ready to move to the upside, and you go long, and what happens? Boom, price keeps going down and down and down further. And so this is an advantage, and it's not only with the RSI, it's a standard situation with every indicator. Now, an RSI is an oscillator, so any indicator which is banded between a value of 0 to 100 is classified as an oscillator, and any oscillator, when price is trending, tends to remain in the oversold, overbought regions for a considerable period of time, giving you false signals. Now, this is something again which a lot of traders are not aware of, that oscillators like RSI, MACD, the stochastic, the CCI, these oscillators, they work best when price is range bound. So when price is range bound, let's take a situation, if I can see a range bound situation somewhere over here. Can we see, okay, this looks like a pretty, I would call this as a range bound situation, where price is range bound. It's not trending up, it's not trending down, it's within a certain levels. Now, of course, the RSI is not suitable for this, but if you look at range-bound situations like this, and if you use an oscillator like the stochastic, it gives you good oversold, overbought levels. So it'll define the levels of resistance and support pretty well. So you can sell at a resistance, you can buy at a support. Now, that's the best use of an indicator. You cannot really use an indicator in a trending market. Right, but let's have a look at the RSI. Now, the way I use the RSI is to determine if a breakout is genuine or it's false, and to determine momentums. Now, that is more important. Let's come back to this range bound situation. Right, we'll come back to this range bound situation. Now, the way the RSI is calculated, it's an excellent indicator to show the momentum of price, to give you whether the momentum is building up or the momentum is reducing. Now, price action, whenever price changes trend or continues with the trend, one of the first thing that happens is there is a shift in the underlying momentum. So if price is range bound and it has to continue the trend, your momentum is going to change first, which causes the price to move. Now, this shift in momentum can be seen pretty accurately on the RSI. Now, that is more important. Alright, so first let's have a look at the momentums. Let's use the RSI in a different way and talk about just the peaks and the valleys of the RSI, just the peaks and the valleys. So if I'm talking about the peaks and the valleys, let me take a situation, let's say currently, or let's take this situation. Right? I want to take this trend. This was a high, this was a low. Now, as we said, if you're trading the hard right edge of the chart, you would have probably gone long somewhere over here and price would have kept going down. Now, is there any way for us to use the RSI to tell us that, okay, this may not be the situation? Now, based on this, let's examine the peak of the RSI. This is your peak of the RSI. Now, I'm talking, let's just zoom this inside. I'm talking about the peaks of the RSI. I'm talking about this peak. Then you have this peak. Whenever RSI moves up, pulls back, this is a peak. Then you have this as a peak. And then you have this as a peak. Now, when you are trading the hard right edge of the chart, this is a situation that we were in. Remember that we had said that your RSI is bottoming out, and you have a situation where price could move. Now we are looking at the peaks. like a downtrend, in a downtrend of price, you have the highs going lower, right? Just simple price action. What constitutes a downtrend, folks? A downtrend is when you have your higher highs, your highs going lower, and even your lows going lower. Similarly, even your RSI gives you the same thing. Each peak of the RSI, if you see, is certainly going lower. Now, what we are looking at is we will be looking at a peak of the RSI. Now, what I will do is I will plot a line on this peak over here. Now, this again is giving me a situation. Once RSI crosses this peak, you can say that, alright, this looks like a good situation, but this is a trick that I tend to use, is once price is moving down, lowest peak, if price breaks RSI, we will wait for price to break the next highest peak. If it breaks this next highest peak from the low, then it is a genuine move towards the upside. That means the momentum has shifted. And let's see what happens. There you have the RSI. It doesn't cross that. It just keeps going down below that peak. Just keeps going down. And when does it cross? Right? Now, shift of momentum. You have, like in price, you have this peak over here. Your next peak has rallied up. So your next peak is higher. And the next peak also goes higher. Now this is telling you that there is a shift of momentum. But mind you, this is never a confirmation, and you will never think about a change of trend till the RSI breaks the second last peak. Right? Now this tells you, now the situation, the ideal situation here would be that if you are short, you would tend to take profits when you see that your RSI peaks are going higher. But you would not take a long. You would only take a long when price breaks this particular level of the peak. So if I was short on this particular trade, I would have probably started taking some profits right over here. In the process, maybe I would have missed out on some down moves, further down moves, but that's fair enough, right? I always say that a bird in the hand is worth two in the bush, right? So you have taken your profits. You don't know what's going to happen next, and you are waiting for price. Now this RSI peak over here, and now if you're going to look at it, your bottom of the RSI, your valleys, I call them the valleys. This was the lowest low of the RSI, right over here. Your next RSI valley has gone up. Now what is this telling you? This is telling you that an uptrend is on the way. What, folks, is a definition of an uptrend in price? On an uptrend in price, this previous uptrend, your highs go higher, your lows go low. Sorry, your low higher, my mistake, sorry. So what's happening over here? You have your lows going higher, you have a highs going higher. So you have a possibility of an uptrend. Your RSI can give you advanced warning of a possible shift of momentum, but it's never a confirmation. The drawback, if you can call it, that price can still keep trending down, and RSI will show you a shift of momentum. In the process, you may lose out on some short trades, on some profits towards the short side, but that's fine. But you should not go long till the time your RSI breaks this second last peak. Right? Let's take it one by one. There you have. Now this is a place where it tells you, if you're looking at price, isn't there a possibility that this could just be a strong pullback and price can still move towards the upside? But what is your RSI telling you? Your RSI has broken this. So it tells you now the momentum has definitely shifted to the upside, and now you can take longs. Once again, do not use indicator solely on the basis of this. Always collaborate it with price action. So you will be looking at maybe some levels of support resistance on price, wait for a break of an important level of resistance for price. But if you look purely at the RSI, this is what happens, and what happens? Look at where price goes up, right? It did move up. Now let's take a similar situation. Let me show you something which is currently on the Aussie dollar. On the daily time frame, I tend to use higher term time frames because I trade mainly on higher term time frames. It gives you a lot of time to prepare for your trade, one, and you can see things a little more clearly. Now this concept of the RSI will work just as well on a smaller term time frame. It definitely does, but I would prefer working on a higher term time frame. Now if you look at the Aussie right now, right, let's have a look at this very strong downtrend on the daily. Now if you look at this trend here, you can see that it's very much in existence. Every time price makes a pullback, a small pullback, it goes back to the downtrend, makes a pull down to the downtrend. Now this pullback can definitely move back to the downtrend, right? It could just find resistance somewhere, could find resistance at a previous level of support, and could still move to the downside. Is there anything that's telling us that, okay, we can think about going long over here? Let's look at the RSI. Right now, if you look at this peak, the swing high of price, and if you look at the peak of the RSI, on the downtrend, you have your peaks going down, down. Now here you had, on this pullback, you had this peak moving up, then this one. Right? If I plot a line on this particular one, it has broken it. This pullback has showed a shift of momentum, and maybe I would have, if I was in a short trade, I would have probably taken off some profits over here, knowing that there is a possible shift of momentum. But do I take a long? No, I do not take a long till the time price does not break this particular peak. So let's put this one over here. Right over here. Has broken this? Not yet. So I can still expect that there could possibly be another movement to the downside, though it's always still showing a lot of positive divergence over here. You have price making lower lows, your RSI is making higher lows. So you have the RSI moving, but is there a confirmation to go long? No. If you were short, maybe you would have taken profit, saying that there is a shift of momentum. Is there a confirmation? There is no confirmation. Now see, I am not looking at the oversold, overbought areas at all. I'm not looking whether the RSI goes above 70, comes below 30. I'm just looking at these peaks and these valleys, right? Just only these things. So this is one way of using the RSI because it tells you the momentum. Right? Only if price crosses this particular level on the Aussie, on the daily, I would think about going long. Till the time, I would still say that price may still continue the downside. Remember the drawback, as I said, the RSI gives you an advanced warning. As a matter of fact, sometimes it can give you a much advanced warning. In the process, make you lose out on some existing trade that you're in. Part of the trend, you may want to ride the trend to the end. Your RSI is going to tell you much earlier that it's going to change, and the trend will still continue for some time. But that's one disadvantage I can definitely overlook if it gives me a certain heads up about the expected change of price. Right, so that's one way. Now, let me show you another way of using the RSI. Like we plot trend lines on price, we can plot trend lines on the RSI. Right? Now, if you have attended one of my previous webinars over here where we discussed the best way to plot trend lines, the correct way to plot trend lines. In case you haven't, it's available on the FXStreet section, education section. The webinar recording is there. I would suggest go over it because plotting trend lines is actually an art. It's not exactly a science. And a lot of traders have different ways of plotting trend lines. What I've gone over is the practical way of plotting a trend line. And so what you can do is you can plot your trend lines. Similar to the trend line on price, let's plot the trend line on RSI. We will connect the peaks and the peaks. If I connect the peak over here, and let's just zoom this inside. Right? What you have is look closely at this particular situation. Exactly, Peter. This positive divergence can be seen on any indicator, any oscillator. Your MACD, your CCI, your stochastic will show a similar divergence. But what we are doing over here, now this is just the divergence, but we are not really looking at trading the divergence. We are looking at the levels of the RSI. If you look at this particular situation closely, you see this trend line. RSI comes up to this trend line, finds resistance, moves down, and then moves up. So this pullback of price which was there was a strong indication that there is a shift of momentum coming up. Most of the times what happens is, in this situation, of course, price moved down. A lot of fundamentals at play over here. Now, this on the daily that we are looking at, I would have expected the Aussie to rally from somewhere over here based on the RSI. But subsequently, it still went down because, you know, the fundamentals, we had this quantitative easing expected to be stopped. So you had the US dollar rallying, the other currencies moving down. So this was fundamental reasons. It happens in Forex. Most of that happens is if you plot an RSI, a trend line, your RSI comes back to retest the trend line. Now, if you find a situation where this is not the correct trend line, but if you find a situation where you have your RSI finding resistance, break, and comes back to find support, that is a very, very strong confirmation of a shift of momentum. And this is one place where you can actually take it as a confirmation and get into a trade. Because a retest of the RSI or an RSI line, trend line on the RSI turning from support to resistance is a very, very strong indication. Right? You can plot your trend lines anywhere on anything. Just remember that you have to plot it on the peaks. Let's get back to the euro. Right? I was going to discuss another range bound situation. We'll come back to this. But let's plot trend lines over here. Right? We are looking at this existing downtrend. If we connect, or as a matter of fact, let's look at this one over here, this uptrend over here. Connect the values of the RSI. When is it going to tell you? This was a place when it had said that, okay, it's broken your trend line and the momentum is shifted towards the downside. You will, of course, look at the horizontal levels also. You will look at the horizontal levels, and only if price breaks the second level, you'll think about a confirmation. Let's take a situation over here now. I just saw this, right? What was the previous levels? This was the previous level. This would have been a level, right? On its way down, price breaks one horizontal level. So a shift of momentum. We are going to wait for price to break the second level before we go short. And what did RSI do? It came and stopped exactly here. If it came and stopped exactly here, it bounced up from here, that means price is going to go up. This is one of the situations that you can really look at. Right, so you look at the horizontal levels on the peaks and the valleys. You look at trend lines. Now let's have a look at a range bound situation. Now in a range bound situation, and this is what we call as the law of the charts. Whenever price is range bound, most of the times it tends to break out on the false side. So it tends to break out towards the side where it will not go subsequently as a trend and then moves the other way around. So if you look at this situation, the RSI will tell you whether this breakout is genuine or it's a fake breakout. You can even call it as a head fake. My word for it is the head fake. Right? You had price range and it breaks out. Now what I'm saying is, just give me a moment. I need, where is my, okay. So what you have is prices range bound over here. Most of the times it comes out here and then it moves to the other side. Now this is what we call as the law of the charts. Folks, let's just get down to something very basic. When you're trading a currency, are you really trading or buying and selling a currency? You are actually trading other traders, right? You're buying it, somebody else is selling it to you. The market moves on the psychology of traders. Now if they say that about 80 to 85% of the traders lose money in Forex, there is a 15 to 20% who are making money. So where do they get their money from? So obviously they are feeding off these losers. What you want to be is you want to be on the right side of the winners. Price action going anywhere is a combined effect of the psychology of price movement, what traders perceive and what traders actually do. Now the professionals know exactly how a new and amateur trader is going to react, so they drive price one way or the other to take out the stops of the amateur traders and obviously take their money. Right? This is just basic understanding of the trading. So breakouts from a range, most of the times it happens that price breaks out on one side and then it moves to the other side. So it's just a question of taking out stops. Now here your RSI is going to tell you whether this breakout is genuine or not. Now let's do the similar situation here, and on the range bound let me plot this on the RSI. Right, somewhere close by over here. Move it a little over here. So this is where your RSI was. Now if you look at closely within the range over here, let's again look at the peaks and the valleys of the RSI. You have the peaks. Let's plot a line on the peak over here, right over here, and let's plot a line on the valley. Now if you are looking at it, these are the range situations, you need price to break out. If I take an inside peak or the valley right over here, you have when price moves out of the, it breaks this particular peak. Now this could still be a false breakout. If it is a false breakout, what price will do is it will not break this lower one. Now this is one trick which I use when price is range bound. When price breaks out of a range, you must just plot your horizontal lines on the peaks and the valleys of the highest and the lowest of the RSI. If price breaks out of it, it is a genuine breakout. Yes, you may get in a little late and price may, by the time this RSI really breaks out of it, price has gone a certain distance, but then it's expected to be a genuine breakout and price would continue towards the downside. So you can still get some moves. What happens is, in case it's a fake breakout, your RSI will not cross this. It will find support or it will stop somewhere over here and you'll know that this is not a genuine breakout and price is going to go to the other side. Right, so RSI actually is very good to determine the false breakout or a fake breakout. Head fake is what we would call it. So these are the 3 or 4 characteristics of the RSI that I tend to use. Let's just briefly recap it. The most important are the levels of the RSI, and just one piece of advice, keep the setting at 14. I know a lot of traders, I've been talking to traders when I talk about this strategy, they say, oh, we can tweak it, let's make it 9 or let's make it 21. If you're comfortable with that, go right ahead. But remember, all indicators are lagging, and if you use them in the standard settings and if you don't tweak it around too much, they're still as effective. So you keep the RSI setting at standard, at least I keep it as standard. Whenever the RSI makes a move up or down, you can look at the peaks and the valleys, and the peaks and the valleys, the levels of the peaks and the valleys will give you an advanced warning about a possible shift of momentum, and will tell you, the break of these peaks and valleys will tell you whether a breakout from a range is genuine breakout or it's not. You can use a trend line on the RSI to confirm it. Bottom line, once again folks, is all indicators are still lagging, but using the RSI this way gives you an advantage. It gives you an advanced warning. But always use something as a price action to confirm the same. Do not rely solely on indicators. Let me end with one very practical piece of advice which I talk about whenever I talk about indicators, is never use an indicator to decide your trading parameters, which simply means that your entry, your stop, your exits from a trade should never be based on an indicator. So that MACD line crosses over here, I'm going to take an entry, or a moving average crosses, or if an RSI goes, or you take my my system over here and say that if the RSI crosses this peak and the valley, I'll take an entry into the long. No. your entries are to be decided on price and only price action. Your indicators are just that, folks. Indicators, they are not confirmations. Alright, so that was about one more practical use of an indicator. So we went over the Bollinger Bands, we went over the RSI. The next time, the next session, whenever, we'll take another indicator and look at some practical views. Alright folks, that's about it. If you have any questions, I'm here to talk about it. Here in the room for some time. Hope you picked up something from this webinar, learned something new, or used it properly. And once again, you're welcome, Pan on Fire. Well, maybe I'll try to go over it once again the next time, MRC. We are kind of running out of time. I just have to be somewhere else on another session. But if you use it, I'm sure you'll get a little used to it. Alright, so once again, we are having the next live workshop in London where we go over these practical methods of trading and look at price situation, price-based techniques. This workshop covers two very simple to use and very effective trading techniques: the 1, 2, 3 pattern and the 200 moving average strategy. Very simple, very effective, and a very high potential trade technique. So if you're interested, you can go to this page. Let me just put up this page over here. If you're interested, you can sign up, or I will see you folks next week. Till the time, have a good trading week and have a nice weekend. If you have any questions, of course, feel free. If you want to talk to me about anything, you have any situations you want to discuss about the RSI that we looked at, this is my email address. Feel free to contact me at any time. Yes, Peter. It would definitely have more relevance. Now, Peter has a point over here. He says that if you applied this to a line chart, it would have more relevance. But remember one thing, Peter. You are using the RSI in conjunction with price action. And for price action, your candlesticks or even a bar chart is definitely much better because it gives you an open, close, high and low. A line chart will not give you that. So I would prefer using a candlestick chart along with an RSI, because if I'm using price action to confirm, if a RSI is giving me something in advance, I need the price to confirm. For me, a candlestick is the best way of using it. But yes, your point is pretty valid that a line chart would certainly give it much more relevance. Alright, thank you, Peter, for your kind words. And if you have any other questions, please let me know, folks. I'm here for some time. Otherwise, I'll see you folks next week sometime. Thank you for being over here. Always a pleasure talking to you folks. And have a great trading week. Trend lines and simple levels of support resistance are the best confirmation. And just looking at price action gives you a good indication about what levels of support resistance are. And let me show you something what we've been looking at on a larger term basis. Now this is of course on a larger term basis, but then when I talk about price action, levels of support, resistance, of course, this is a monthly chart, but let's just forget, as I said, this is exactly what I'm doing, Dhruv here. Yes. Right? Look at this level of support on the USD JPY on the month. Right? You have support, 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 which has turned into resistance. Now, we were waiting, we've been tracking the USD JPY for months together. We've taken some good longs on the USD JPY. This was previous level of, let me just shift it a little. Price gives enough clues, it's up to you to take it. There was support, support which turned into resistance, which turned into resistance. A break of this particular level would mean that price has a clear run to the next possible level. So if you're trading, now this is of course on a longer term time frame, but if you're trading even on the 15-minute or on the 1 hour, and you come across a situation like this, you have an excellent trade, because this is what we call as a home run. There are not many levels of support resistance in between. It's absolutely clear. So a break of this is giving you a target. Price is expected to go here, and look what happened. Price found resistance. Now, as of now, we don't know on the longer term what's going to happen on the USD JPY. We're just waiting. Remember, we are not astrologers, which I keep saying. You're not here to predict, you're here to follow price. If price breaks towards the upside, I'll look at another level of resistance support as a target. If it finds resistance, moves down, I know where it's going to go again. Now this is what I talk about price action. Simple levels of support resistance coupled with maybe trend lines. Use trend lines properly. As I said last time, we had a look at how to plot the correct trend lines. Just use simple thing, folks. Keep it very simple. You do not need indicators. You honestly do not need indicators. Now if you look at this, I have this stochastic with this setting. This is the only indicator that I have a standard setting on all my charts, and I use it only to look at divergence. That's about it. Now price gives us enough of clues. Well, absolutely. The RSI would have definitely given us a better situation here. Do an experiment. Open up the USD JPY monthly chart. Look at the concepts of the RSI that you have learned today, what I have discussed today, and see whether it would have given you some advanced warning. Right? And get back to me. Tell me that, okay, this really did work. As a divergence, price made lower lows over here. It has been making lower lows, and your stochastics have been making higher lows. So you have a divergence coming up right from here. Alright? So coupled with price action is more important than the indicator. Indicators are just that, indicators. Take it with a pinch of salt, use them to the correct potential, but rely only on price action. Alright folks, I think we are out of time, and it's good questions today. I really like to discuss these kind of things. Once again, Dhruv, it is simple levels of support resistance. And if you want more, see, there are ways and methods to use that. Levels of support resistance, you can go down to smaller term time frames, but there are other tools also that we use. I cannot disclose anything, because if I tell you, well, as James Bond would say, right, I would tell you, but I would have to kill you. So you'll have to attend a course to learn all of these things. And these are meant for the subscribers. It's not a question of that I just need someone to pay for it, but I believe that there are no free lunches. Quality information, if you need good quality information, you must be ready to pay something for it. There is tons of information available for free, but most of it doesn't work. And if you have something which is genuine, and most of my traders who have taken the courses are doing extremely well, it's because we are very practical in our approach. That's about it. Alright. Okay folks, I'll see you folks. Alright Dhruv, thank you very much for all your questions, and I'll see you folks next week. Thank you. Alright, my pleasure.